Hi, how's it going everyone? My name is Henk and welcome back to the channel. Today we're going to be taking a look at another bank in the financial sector, which is ANZ. Now, a few weeks ago we had a look at Heartland Bank, which you can check out the video, which I will link somewhere up there. Now, I went over some of the reasons why I personally like Heartland Bank. And again, disclaimer, not a financial advisor and this is not financial advice. So recently, the Reserve Bank of New Zealand has raised interest rates for the first time in 7 years. And as a general guideline, when the interest rates are high or start to increase, banks tend to earn more money because banks charge a higher interest rate on their lending as well. So sure, they might pay you a little bit more on your savings and your term deposits, but they are far more likely to increase their loan interest at a much quicker rate. Now, with this general idea in mind, let's take a look at the financials for ANZ. Now, they are one of the biggest banks in New Zealand in terms of total customer number. They have a market cap of $83 billion, which makes them slightly smaller compared to Westpac in terms of pure market cap, with Westpac has a market cap of $99 billion. Over on MSM Money website, which someone would always ask me which website I use, so this one is MSM Money. So over the past few years, they have achieved a similar amount of revenue of around $21 billion. However, their net income from 2019 financial year to the 2020 financial year has fell by around 40%. To 3.58 billion. So they had a net income of almost 6 billion in 2019 and 3.5 billion in 2020, and that is a significant drop off. And obviously a lot of that could be due to the lockdown and the disease that's been going around, but still that's an extremely steep decline. The upside is that from their most recent half-yearly report, they had a significant bounce back in profit for the first half of 2021. So the first half of the 2021, they had a profit of around 3 billion, and that is up by 45% compared to the second half of the year 2020. Now, this is in part fueled by the massive increase in the amount of new home loan being signed up in Australia. So in the financial year of 2020, they started off reasonably slow with the gross new home loan accounts, and towards the end of 2020 and the beginning of the 2021 financial year, they had a significant increase in the number of new home loan accounts, up by almost a third compared to the previous years. And of course, a lot of that could be due to the low interest rates that we had in many countries that were designed to stimulate the economy. If we actually have a look at where the majority of this income is from, the majority of the income is fueled by the retail and the commercial businesses in Australia, which shouldn't really be that surprising. So, for example, for the first half of the year 2021, in terms of just pure total income for the Australia sector, it accounts for slightly more than half of the $8.4 billion. In terms of the New Zealand sector, the New Zealand sector only accounts for 1.4 billion out of the $8.4 billion that they've earned in the first half of 2021. So that's only around 20%. So obviously a significant amount of their business is still within Australia. So if we look at the breakdown of the Australia business, over 80% of the Australia retail and commercial is due to home loans. We can compare this to the New Zealand section of the retail and commercial lendings, which 69% are due to home loans. So overall, home loans is the largest profit for ANZ. Now, this is not particularly surprising, but this is also why if we want to see how well the company is doing, we should really look at the increase in amount of funds under management for the home loans. So sure enough, if we dig through the data once more, we can see that from the first half of 2019, they have a total funds under management of 269 billion and a similar amount for the first half of 2020. However, in the first half of the financial year 2021, they increased that to 281 billion. Now, this is just pure home loans. So what we're getting from this is that home loans has been a relatively stagnant but good business for them. But during and especially after all of the lockdown, it has been increasing at a significant pace. So obviously that's what's driving up their profit margins as well. Now, if we hop back to Yahoo Finance, back in the statistics sector of Yahoo Finance, we can see that ANZ has a return on equity of around 8%, which is really quite low. However, this is, after all, a bank, and banks aren't especially known for their high returns on equity like a growth company. However, they are achieving a year-over-year revenue and earnings growth, so that is still a very good sign. If we look at the dividend for ANZ, which is one of the main reasons that we look at banking stocks, they have a decent dividend yield of 3.84%. In fact, if we look at their past dividend payouts per share, so in the 2016, they had a $1.60 in terms of dividend payout, and that has been relatively consistent over the many years since that, and it has dipped significantly to 60 cents per share in the year 2020. Now, for the first half of year 2021, the dividend has bounced back to 70 cents. And we are expecting to get a dividend as well for the second half of the year 2021. So they have been consistently paying out dividends over the years. Over on Market Watch, ANZ has a consensus analyst price of around 29 Australian dollars. Now, we need to keep in mind that that is indeed in Australian dollars. If we convert that into New Zealand dollars, that ends up to be around 31 New Zealand dollars per share. Now, this means that there is a 7.8% upside that analysts are expecting for the ANZ price. If we look at the share chart for the price movement for ANZ, it kind of has been just bouncing between a range here and not really going anywhere. And if we zoom out into a monthly view, and we can still see that the ANZ price range just constantly bounces between a high of around $39 to $40 and a low of around $15. So it has never really significantly deviated from that range within the past 15-20 years. And it's very hard to really expect it to suddenly break out of this particular range. So overall, banking stock prices don't tend to move dramatically, and ANZ, as one of the more established banks in Australia and New Zealand, they are more focused on trying to minimize risk than continue on innovating. So I would probably expect their stock price to increase over time as the interest rates rise. Now, if nothing else, there will still be a good option as a dividend stock. Now, their payout has been pretty consistent over the past, and it's certainly better than a long-term deposit that banks offer at the moment. So let me know what you think in the comments below, and as always, I'll see you in the next video.